Major central banks give priority to the struggle against inflation rather than to sustain an economic growth. So investors abandon hopes for a dovish reversal in rhetoric and regain the risk of mood. This issue set the tone for the New York session. Wall Street indexes opened and closed yesterday roughly at the same levels. The Dow Jones revealed the most active intraday moves and closed 0.3% down. Both the Nasdaq and the S&P 500 inched down 0.1%. Today, the benchmark indexes are trading firmly in the red. The S&P 500 is expected to trade in the intraday corridor between 3,680 and 3,770 points. Traders anticipated remarks by central banks leader Jerome Powell, Christine Lagarde and Andrew Bailey and digested their speeches with a disappointment. All of them confirmed that commitment to curb inflation even at the cost of economic growth. Fed Chairman Jerome Powell places more importance to inflation risks than to a slowdown in economic growth. He said it would be a grave error to downplay price stability. His counterparts from the ECB and the Bank of England supported Powell's commitment to tame inflation. They agreed that soaring inflation could persist for too long unless they take drastic measures. In the light of such statements, analysts drew a conclusion that the US Fed would not care about a downturn in the stock market until the panic reached a boiling point. Early investment bankers said that the S&P 500 has to decline another 15% to hit the bottom. Today, global stock markets are trading firmly in the red. Asian stock indexes closed mixed. European equity markets were hit by massive selling. High-tech giants such as Microsoft, Apple, Amazon, Meta and Tesla shed 1.3% in the New York pre-market. Today, market participants get to know the US PCE price index, a preferable criterion of the Federal Reserve to judge on inflation. The PCE deflator in the US edged up 0.2% in May from a month ago, following a 0.6% increase in April. The actual reading is weaker than the expected 0.4% growth. Americans expanded spending on services, including international fares, hospital bills, and gasoline. At the same time, they reduced spending on the new cars and spare parts. By and large, high consumer prices put a strain on the households' budgets. The market will be able to evaluate the full picture after release of PMIs. Anyway, the market is set to trade under high volatility today. If Wall Street indexes close with the losses, this will be the worst result for half a year in the last 5 decades. Meanwhile, the US dollar is taking a break. Its index approached 105.35 today, aiming to print a higher high, but it retreated to 105 again. The intraday corridor for the index is defined between 104.9 and 105.50. To sum up, the Fed's hawkishness and global risk aversion enabled the US dollar to close the second quarter with the strongest gain since late 2016. There is a fly in the ointment. Fresh statistics from the United States cooled down dollar bills. The weekly update on the US unemployment claims fell short of expectations. The number of first-time jobless claims declined by 2,000 to 231,000 last week. The market had projected a more significant drop to 228,000. The USD CAD pair has got stuck at around 1.2880. The trading instrument is unwilling to escape from the flat market. It's now looked inside the range between 1.2870 and 1.2910, awaiting a market catalyst from oil prices and a dollar-related news. Canada reported its gross domestic product for April. Canada's national output grew 0.3% in April on month, following a 0.7% increase in March. The GDP growth is an uptick higher than the expected 0.2% rise. The growth was mainly driven by the mining industry, oil and gas sector, and service sector. However, analysts expect Canada's economy to contract 0.2% on months in May because of the mining industry, oil and gas industry, manufacturing sector and construction might be losing momentum. Crude prices are going down today. OPEC and its allies are completing the summit. The market does not want them to scale up oil output despite pressure from the White House. So, Brent crude dipped 0.8% to trade at $115.25 a barrel, and WTI lost 1.38% to trade at $108.26 a barrel. The crypto market is on track to close with the worst results in a few years. Bitcoin tested support at about 19,000 and lost 5.35% in 24 hours. If the crypto does not manage to recover, it could slump 60% since the beginning of the year. Ethereum is printing even worse dynamics. The token bumped into the level of $1,000, having lost 8.43% in 24 hours. The crypto market has been braced by massive sell-offs this year. Samuel Bankman-Fried, FTX founder and CEO, said that some crypto exchanges were already insolvent. In this context, the rosy outlook is out of the question. In the best-case scenario, Bitcoin will be able to settle above $19,000. Otherwise, it could dip to $18,400. To sum up, Wall Street is closing the dismal half a year on a roller coaster. Trade prudently in this perfect storm. See you tomorrow.